Our third panel discussion on the theme Leveraging Technology and Fintech Disruption, Innovations, Opportunities and Challenges, and Investor Education. Ladies and gentlemen, please join me in welcoming our session moderator for the panel discussion 3 on the theme Leveraging Technology and Fintech Disruption, Innovation, Opportunities and Challenges, and Investor Education. Please welcome Mr. Jayprakash Gupta, Co-Chairman, National Council on Capital Market, ASSOCHAM, and founder, Dhan. Joining him, we have our eminent panelists, Mr. Sandeep Bhardwaj, Co-Chairman, National Council on Capital Market, ASSOCHAM and MD and CEO, Paytm Money Limited. Mr. Krishna Kanhaiya, Chief Executive Officer, Mirae Asset Financial Services India. Mr. Shripal Shah, Managing Director and CEO, Kotak Securities. Mr. Naveen Mathur, Director, Commodities, Currencies and Gift City, Anand Rathi Share and Stockbrokers Limited, has joined us virtually. Mrs. Shruti Agarwal, Whole-Time Director, SMC Global Securities Limited. And Mr. Saurabh Bhalerao, Director, BFSI Research, CareEdge Ratings. Thank you. I now request our session moderator to take this session forward.
Thank you. So, सबसे tough part होता है to conduct a session which is before the lunch. So, I'll try to keep it as interactive, as lively as possible. So I hope I'll be able to do justice. So welcome everyone, and welcome to everyone at the panel here. So since morning we have been discussing about various opportunities, how we need to make sure that towards the Viksit Bharat aim, how mutual fund is going to play a role. So we have done phenomenally well. जो journey शुरू हुआ था 90s में till today, from a number in the morning, our chairman Mr. Jindal was speaking about कि 83,000 करोड़ का AUM होता था, वो आज 83 लाख करोड़ पे पहुंच गया है. तो 100 times jump in terms of AUM. We have around 6 crore people who are already participating. तो इसमें दो राय नहीं है कि we are at a right pace, at a right place, and also probably at the right time. लेकिन हमेशा ये एक saying है कि what brought us here is the same thing which is going to take us where actually we want to go. और अगर उसको दूसरी तरह से phrase करें तो what brought us here is not going to take us where we exactly want to go. तो अभी तक जो भी हमने सीखा है, जो भी learning रहा है, वो learnings has given us one outcome, and I think that outcome is unanimous. The future is going to be driven by technology. And the topic for our session is also towards that how the new age technology, the AI, is going to help us in achieving what we exactly want to achieve, or take mutual fund industry to a AUM of around 2,800 lakh crore, which we were discussing in the morning. So the format I want to keep it is like, I want to engage all the panelists here. So the first question would be for each one of us. So I'll start with the lady in the panel first. So Shruti, mutual funds have traditionally been built on trust, regulations, long-term investing. ये हमने इतने सालों से सुना है. Technology is changing all three of them. Okay, what has been the most transformative single, thing which you want to point out, okay, which your organization has taken in last 3 to 5 years towards mutual funds?
Thank you, Jayprakash, for asking me this question, and thank you, ASSOCHAM, for giving me this opportunity. So if I talk about technology, the most transformational shift that we have seen in our organization is how we went digital, completely digital. We are a 35-year-old brand So we started in 1990. And we have seen the days when everything was physical. Even KYC was physical. SIP cannot be done until you give the check. And now, today, SIP, any new investor can do SIP in under 10 minutes. So this has changed the way things are done drastically. However, the technology is actually an enabler for all, the trust, long-term investing that you mentioned. With technology, the trust has increased definitely because, we do all the compliances, Aadhaar KYCs, we are able to regulate our distributors, our agents, and in terms of long-term investing, see, we have seen, SIPs grow tremendously. But what was the enabler? Technology. It was not that people did not want to invest. It was difficult to invest, which people used an excuse not to invest. So technology removed that friction of investing, and this is the biggest transformation I have seen over last 5 years. And the next transformation that is coming in the next 1 or 2 years is going to be data and AI. And how all our systems are interconnected through APIs. So the APification has already happened and it is happening. But now that APification will be used to do a holistic wealth management and personalization of advice. So that will be the next 2 years plan that we are going to be having in our organization. Thank you.
Thanks. So we'll start on my right first. So Mr. Saurabh, what has been the single most transformative technology shift, which your organization has seen over last 3 to 5 years?
I mean, apart from, it's difficult to answer apart from the digitization aspect, it's also how rapidly we can do the analysis is what I would point out. And mass personalization is another aspect. When you are seeking advice or giving advice to distributors, it would also imply every customer has his own unique key features. So technology enables us to advise them using those key features for the particular customer. Instead of having a standard format, point 1, point 2, point 3, you can customize them. That's the main point.
Okay. So we'll go to Shripal now. So what has been your experience so far?
I think we have had an amazing journey as a country from 80,000 crore to 83 lakh crore, 100x in such a short span. So of course the entire ecosystem, whether it's distributor, brokers, regulators, mutual funds, everyone has played a role. And if I look at the acceleration of this growth has happened in last 5 years, and that is only and only because of the technology adoption by a lot of players. And I would give credit to a lot of digital players who have entered the fray from post-COVID, where immediately the digital KYC, UPI payment stack, setting up of SIPs, all that were solved very clearly. But I think now the need is investor does not have a problem in getting enrolled for mutual fund. I think the next question for him is what to invest, where to invest, and how do you analyze your asset allocation, your portfolio. So at Kotak Neo, of course, we are now solving for this through a portfolio analyzer and AI-enabled AI assistant, where investor can not only get onboarded digitally, but through that assistant in a conversational style, he can actually ask questions, which are the mutual funds, which gives, say, for example, best mid-cap portfolio, what is the historical return. In a very conversational format, I think AI can be very useful for a layman to basically, in an interactive format, get advice, get insights, and take decisions. So I think the most important part that AI and technology is solving is that now investor can actually, take a lot of control over what he wants to do and analyze what he has done and take corrective actions.
Yeah, excellent. So, Krishna?
So I come from lending side, and we have a product, loan against mutual fund. So it would be interesting that I'll limit my thoughts from that perspective. So it's not one particular technology. There are multiple changes that have happened in last 5 years. But if I talk about one particular change, I think the real-time API integration has been a boon. And very specifically, if I talk about it, so API integration to RTAs for real-time lien marking. This has been a major change in this aspect, and the impact of this change on trust, regulation, and long-term investing. So trust earlier meant what? Going through the upload of various documents, physical account statements, bank statements. Now the trust is automated because through API we fetch the portfolio and the lien marking happens from the source. So there is no ambiguity, and the trust is built that way. In terms of regulation, so now all kind of RBI limits, they are embedded in codes. So at the time when we onboard the client, so risk mechanism is set in a way where limits are triggered or checked systematically, and we are sure that right LTV is given to the client. On a regular basis, again, the portfolio revaluation and margin calls, these are also, technology has enabled automatic triggers, and there is no ambiguity on that. In terms of long-term investing, overall, because this product gives you liquidity without liquidation, so it helps in retaining the AUM, and that's how this goes into helping sustaining long-term investments.
So, Sandeep, you have been one of the largest distributors of mutual funds among the new age players. So, what has been your experience in last 3-5 years?
जब मैं टेक्नोलॉजी को देखता हूँ तो मैं हमेशा एक तरह से देखता हूँ कि टेक्नोलॉजी का बिहेवियर से क्या लेना देना है. दोनों टेक्नोलॉजी को हम ऑर्गेनाइजेशन पॉइंट ऑफ व्यू से डिफरेंट तरीके से देखते हैं. कंज्यूमर टेक्नोलॉजी को कंजम्पशन की तरह से देखता है. तो मेरे लिए सबसे बड़ा टेक्नोलॉजी innovation was mobile phone, smartphone with internet. That was the biggest disruptor and innovation for a consumer. When that happened, people started consuming everything, each and everything through mobile. Now, when your behavior is changing, you can't invest physically, but majority of things you do on mobile. So organizations were forced to build things which consumers can consume over the phone. That's where the entire disruption started happening. First thing went to KYC, it was physical KYC to digital KYC, electronic KYC, then the digital KYC, then today it has become so easy that, investors can open their account on maybe 2-3 minutes and they can invest. Then rest it comes to be empowerment of the customer, empowerment of the investor, how they can take a decision. So the funnel starts with discovery. As a customer, I want to discover what I want to do. I have a phone, and today, largely, we, as a technology, we talk about AI. And AI helped me to discover what is meant for me. And that discovery helps me to take a decision that, yes, this discovery, this data, backed by my risk profiling, I take certain decision. And the biggest underlying asset, which I feel is execution. How this all API framework which you're talking about helps consumer to execute, which investor may not be seeing that what is going on a backdrop, but the execution has become so smooth today. Whether it's equity investing, commodities, derivatives, we talk about algos, whatnot. 10 orders less than a second, and the mutual fund investing doing SIP. So execution has become simpler. It is like as flowless as water, and then from execution doesn't stop. It starts with optimization. What I've done is right or wrong. So you can, even a portfolio review, you can do that. You can optimize, and then you can do a course correction. I think this is what the technology has enabled for a consumer, where the entire empowerment has given in the hand of consumer, which was used to be with I would say, prime commodity with a few people. So this is what we are enabling as an organization, and we are giving this back to the consumer where they can take decisions, and obviously to scale the industry maximizing the people participation. We are creating a micro product because still 3,000, 4,000, 5,000 rupees SIP a month is far-fetched for many consumers. They can't invest 4,000, 5,000 per month. So how we can do a maybe as low as 20 rupees, 50 rupees mutual fund investments.
Great. So we also have Mr. Naveen Mathur who has joined us online. So Naveen, we'd like to hear your experience as well on this point.
Thank you. ASSOCHAM and the panelists who are present in person. Jay, I'll take a little more minute than what everybody has said. I have joined the broking industry in 1994. And the transformation, because of the transformation, I would like to start from where I begin. And I was in Delhi. There was a pit in Delhi Stock Exchange or Bombay Stock Exchange. People used to go outcry and do business. So in the organization, we started on the client to business. Now, there was no KYC, nothing. There were certain formalities which regulatory KYC as such by norms. So you used to do certain KYC and the account used to open manually into a standalone system of only and only for account opening. One back office software where you can only open the account. Once the trade has happened, you need to pass on the contract to the customer. Now we used to write, and if there are 100 customers, imagine, and there are 100 customers, 100 trades. So 10,000 trades for 100 customers, you need to write on a contract note with all the details and dispatch that to the customer through courier, through postal service. That was. Came 2000, people started talking about something on the digital, advent of the exchanges per se. I would say the things changed post when the NSE came in. So the major shift per se in the capital market, if I would say, in my 35 years of journey in broking, would not be what Zerodha, Angel, Paytm, V, you, Grow, Kotak, everybody did. I think the major tectonic shift which happened was digital, which was exchange NSE, when it stopped everything on the outcry and everything came in as a one system to trade. And I would say that is the most critical aspect. One should appreciate that in 1994 November, the NSE, not just today, what we are talking about, the integration, but the entire ecosystem as to how we used to see the stock exchange changed drastically. And that transformation, I would say, gave opportunities or disrupted many models of doing business. And that disruption came in broking from Zerodha and the like. Angel, part of Sandeep was also there. So a technology forefront, everything was technology in Angel. And I would say that I was lucky enough at that particular point of time in 2014 or I would say 2015 that we started working on robo-advisory for mutual funds. And I'm saying it in the summit, it was 2015 when we started off, since I was taking care of that part of the business too, beyond commodities and currencies. So we started in 2015 what people are talking today of AI revolution, which was robo-advisory. So people used to get advice basis a certain architecture built on the profile of the customer in 2015. So that was a tectonic change. And now, Dhan, Grow, Kotak, Paytm, everybody without naming any name has evolved into a technology framework that if you are not there, you are lost out. So as an organization, we are doing whatever best we can do in terms of profiling, and particularly with respect to the profiling, what assets may not be necessary that we would recommend stocks to the customer based on the profile. It can be only and only mutual fund. And just the last point for a second. I am a mutual fund investor, hardcore mutual fund investor. I haven't invested any money in stock, except for my stocks, like this item. So I would say when I used to do mutual fund in 2000, was a totally different experience through Bajaj Capital, and what I do today is a total different experience altogether. It used to take 15 days to activate account, and in 30 days you need to have your SIP activated. Today you can do it in 3 days. SIP or just next days. So that's a change which has come in the capital market for the mutual fund industry, but NSE has been the change, I should say, the most significant change in capital.
No, thanks, Naveen ji. You have summarized your 30 years of experience in this. No, I agree with you. You know, the biggest leap of faith which India has seen was the establishment of SEBI and NSE going electronic form, because no other market in the world in 1994, even the most developed markets, had the outcry system. You know, and today, whatever innovations has happened in Indian capital markets, all thanks to our, you know, the bold step of our regulator which took at that point of time. So on the first question, I think, you know, we all kind of agree that democratization, digitization, and the ease of, transacting, having the empowerment in the hands of the user because of the internet and mobile phone has been the, you know, the biggest transformative thing. But when you talk about internet, APIs, I think one thing which is the underlying of all of this is the cybersecurity. Okay, so cybersecurity today is no longer a technology issue, it's more about a trust issue. And in this age, you know, where there are millions of investors who are participating in the market, there are organizations, you know, large enough who are handling large number of portfolios. For them, it becomes also a great responsibility to make sure that they protect the data of their users, and there should not be a cybersecurity threat. So when we are talking about digitization, APIs, okay, we also need to touch upon about the cybersecurity risk which we all run through. So we'll start with Shripal here. You know, you run a large broking organization which is into banking, NBFCs, securities. So what is that which keeps you awake at night in terms of cybersecurity?
No, Jay, you are absolutely right. I think the more you adopt technology, the more you are prone to this cyber risk. And, that's what keep all of us awake, whether it is me or it is our board. And I'm sure all of us are completely worried, what if my app or our app goes compromised, and what if your money or your investment is at a risk? And I'm sure that is changing a lot. And with the invent of AI and AI capabilities, I'm sure everyone would have heard about the Mythos launched by Anthropic. The Mythos is so capable that it's having superhuman capability to bridge any system in the world. And that's the very reason I think US government has stopped the rollout of Mythos. And even Indian government wanted to have a look at Mythos, but I don't think they've still got access. So what keeps us worried is that the very AI, which is making us very productive and creating revolution, can actually, if goes in the hand of bad actor, it can actually expose the vulnerability and the defects which none of our engineers were ever detected. And technically they can do any cyber attack, they can compromise your system, investors' money, our money, and it can create a havoc. So obviously, as we adopt AI, I think the approach should be, rather than only looking at productivity from AI, we should use AI to ensure that we have a proper defense system on cyber side. So absolutely right, I think the need of the hour is that how do you ensure that such a beautiful tech ecosystem that is developed is never ever compromised. And that is our all of us fiduciary responsibility to ensure that it does not create any trust issue going forward.
So I'll pose this question to Sandeep as well. So you were talking about, more democratization of investing, where 20 rupees SIP, 100 rupees SIP. But we also need to understand the audience who is coming and enrolling for this 20 rupees, 100 rupees SIP. They are the most vulnerable lot. They come to mutual fund or they want to invest purely on the basis of trust. And they are the most gullible people who do not understand the nuances of, what kind of risk they run. So what is that, if your business has already those kind of clients who invest in mutual fund on smaller ticket sizes. So what is the threat you see here and what is the kind of precautions you are taking?
Yeah, so when I look at 20 rupees or 100 rupees SIP for a consumer, that works a lot more on a mindset point of view. When I started my career and I was guided by someone to invest in stocks, that was still, I felt like, very complex things for me, even being an educated person. And how much amount I need to invest. And that was back then, it was not so open market too. But when comes to a retail investor who wants to invest is the first equity investments by mutual funds, what comes to their mind is, what is the right amount I can invest? And unfortunately, wherever we see, like do 5,000 SIP, invest 10,000 or something, whatever. So that doesn't go well with them and that doesn't unlock the fear of investing. When we market 20 rupees or 30 rupees, doesn't mean that people want to invest 20, 30 rupees. They want to invest more. But the fear of the minimum, the fear of starting holds them. So probably this is lot more psychological, where when you pitch them small, that helps them to get encouraged and participate. Everybody wants to grow, and I've seen even the minimalistic SIPs, those who do by way of daily SIPs, their monthly ticket size is not less than the people who invest in a monthly SIPs. So that was the data suggests. And the second part of your question is, we also need to be mindful of, because these are the people who are investing small amount, they have a larger aspiration goals, and they want to accumulate money for their bigger purposes in life. So how we can be mindful guiding them, that where do they need to invest? So they are not making a mistake of selecting a wrong instrument, selecting a wrong, probably scheme, which is not meant for them. So risk management becomes one important category for them. So we as an organization remain mindful of guiding those customers where to invest, how to start, not where to invest, I think that would be wrong, how to start, right? Once you address that, you have enabled two larger things. One is start small, that removes the fear, and start right. So when you address these two things, you introduce more and more customers coming to you.
Great, thanks. So I'd like to come to Saurabh. You represent a care rating agency. So if you have to rate an organization or rate an industry, okay, how important you feel is the adoption of AI, adoption of technology, and also taking care of the, cybersecurity threats become important?
Thanks. While as a rating agency, we do place importance on what systems you have, what technical architecture you have. But that's a secondary. As a primary rating agencies, we develop, look at how their ability to prepay and how would technology be disrupted by that. So we would necessarily need to see how AI or any other technology has been adopted, how are safeguards being implemented, what sort of safeguards and what sort of certifications have you done. And while necessarily we are speaking of technology, what sort of human element is involved there? Because more often than not, the safeguards are compromised not because your technology is broken, because it's compromised because the humans involved tend to get spooked.
Yeah, thank you. Yeah, that's it. Yeah, thanks. Okay. So we're talking about technology, and this is what you need to be prepared for. Yeah. Yes. Yeah. So so we saw a small example of a black swan event. Yeah. So I'll come to Shruti. So now, your organization is into multiple businesses. Your organization has seen a journey of from physical to phygital to digital, right? And in this whole process, now I'm sure you guys are also adopting on the AI side of things. So my question to you is that, how are you prepared or your organization is prepared from the risks, frauds which can be generated through AI or AI cloning?
So definitely AI will be a game changer in the industry. Like we are also, launching AI-based analysis, AI-based comparing of funds, AI-based comparing of stocks. So these are the things we are working on. But the risk remains, like, will my data be secure? Will my, AI defraud my customers, impersonating me? And that has been the biggest challenge in cybersecurity, because all other challenges such as like breaching my parameter, all is about discipline on how well I've implemented my processes, which I think is already taken care of by, regulation like SEBI's cybersecurity and cyber resilience framework. So that has been already there. But the challenge of, fraudulent apps, the challenge of my stock market researchers being impersonated and deep fake videos. So that is one thing that as an industry we have still not solved for. And I feel AI can be tackled through AI. So using AI for liveliness detection, using AI for understanding, anomaly detection, fraud detection, that is one thing that as an industry we should focus more on adopting. And secondly, I feel like industry together sharing insights on how we are tackling all these AI-based fraudulent activities, like taking down apps as soon as they are launching. Sharing those insights could really be helpful in tackling cybersecurities, because I'm not worried about attackers attacking my platforms, but it is about attackers attacking the end customer. So that is what the worry is, and definitely AI should be used there, not just to advance our platforms, but in cybersecurity to address those challenges. Thank you.
Yeah, thank you. So I'll come to Krishna. So you touched upon embedded finance, right? So I'd like to understand what role APIs, embedded finance, your technology integration is going to play in expanding mutual fund access.
See, since morning we have been discussing how in last 10 years the AUM has grown from 14 lakh crore to 84 lakh crores. But the investor numbers remain at 5.5 crores approximately. So this shift has happened because a lot of customers have come to mutual fund thanks to various platforms, technology-driven platforms, where penetration to Tier 2, Tier 3, Tier 4 town also is possible without having branch. So that is done. Now if you ask me what is the next level of growth coming from, I personally have a strong feeling it is embedded finance to mutual fund that will lead to the next level of growth. How? So if you look at some of the numbers, 2-year holding, less than 2-year holding for retail equity asset is close to 61%. So 39% gets redeemed even before completing 2 years of holding. Now by any scale, 2 year is a very low holding for equity asset. The funny part is, AMFI does not even track 5-year holding. Though the estimate says 19% of retail asset goes beyond 5 years, that means 81% of retail asset in equity gets redeemed before 5 years. The another data, the retail participation in liquid category. So out of 5.5 crore investors, around 30 to 35 lakh investors have folio in liquid asset. That means in last 4-5 years, when the surge has happened, people have started investing for long term. They have understood the goal investing, marriage of son or daughter, retirement, all those things are happening. They have started investing through SIP, and by all means SIP investing means for long term. But somehow they don't have funds in the short term requirement, for the short term requirement. And because the mutual fund is liquid asset, you can get the fund in T+2, T+3, even if it is in equity. I think this liquidity is overused just because it is available. So if we take care of this part, and this part can be taken care by an embedded finance, which is loan against mutual fund. Please understand, in last 15 years or 10 years, the people have shifted from what asset class? From real estate to gold, from NSE and maybe fixed deposits, right? All these assets had this embedded liquidity available. You don't need to sell your gold, you don't need to sell your property, you don't need to sell your fixed deposit. The liquidity is available without liquidation. That somehow we have to educate investor. It is available even on the mutual fund side. So I'm not saying that you should always avail loan against mutual fund, but if you have invested for 10 years, 15 years for a particular goal, and you need some money for 3 months, 4 months, 6 months for some particular requirement, why are you going and redeeming that fund? Just stay invested and maybe avail loan against mutual fund. It's a win-win for all because distributor retains the AUM, the client rides through the long-term capital journey, and NBFCs or the banks, they can deploy their capital efficiently. So AMFI has given this slogan, loan against mutual fund sahi hai. So I leave everybody here with a thought, if mutual fund sahi hai, then don't redeem it, lean it. So that I think will lead to the next level of growth in the mutual fund industry.
I think more than that, if you look at historically, FDs, when FDs were sold, overdraft against FD was equally a strong product. So that was removing the obstacle people mind that whenever I have a need, I can take overdraft against FDs. And LAS, which was historically loan against securities, was not that popular. Having said the limitation of being digitized, so off lately loan against mutual fund, LAS, these products are also equally digitized. And this industry is also significantly growing. This was largely distributed only banks. Now digital platforms, all distributors are selling it. Industry crossing 35,000 odd crores, which if my number is right, what I saw last time. So there also I'm seeing a lot of traction, what you mentioned. And this will be certainly remove that fear of investing, taking money out. Because average holding period is less than 36 months, even for SIP, which is a long-term asset, so-called long-term asset, where people are unable to meet their goals because of certain short-term needs. So less loan against mutual fund, being digitized product, seen on the same app, can be good point for our customers to stay invested in mutual funds in a long term.
Well, that's a great point, and with awareness, I think we can actually, as part of the ecosystem, we should promote it, because a user of today who has any kind of financial requirements, there is a ready-made overdraft facility available for you. You don't have to go and redeem your mutual fund or stop your SIP. There is enough of liquidity available against your investments. I think that's a great point. So my next question, and probably the last one to all of you, is, we have been talking about digitization, about AI, but in a country like India, do you think AI is the means for all, or is it the only solution which is there, or should we be selective? AI for certain set of audience and non-AI kind of, process for a smaller segment. Before we get and make AI as one all, solution or a panacea for every kind of problem that exists in financial markets or mutual funds. So what's your take on that?
So AI is a pretty wider domain, and we can't disassociate certain section of the society out of it. Any technology will have a wider impact on each part of the society. Degree of impact can be higher or lower. Probably when I talk about a smaller investor who starts with 100 rupees, probably degree of AI impact will be smaller. Or the person who is investing maybe HNI, ultra HNI, they will look at AI in a different manner. So you can't disassociate yourself. No, AI is only meant for few. And this is part, and you are consuming AI not only from financial point of view, you are consuming AI from your lifestyle point of view. And something which become a part of lifestyle, you can't disassociate, okay, financial decision I'll not take basis AI. So somewhere we need to enable this ecosystem for consumer as far as BFSI is concerned, where consumers can understand AI first, though AI is visible, but they can't understand. So they can easily understand, they can consume, and then they can take decisions.
Okay.
I would like to add, because I have a slightly different point of view here. So I feel like the smaller consumers will be using AI more, because the HNIs will have their wealth managers, their advisors to advise them. And if we talk about, advisory to mass, then AI can be a game changer, where it can economize the, the cost of advisory to my small customer, to my tier 4, tier 5 customer who's investing 100 rupees SIP. So that is where I feel AI will play a very big role in advisory specifically, if done in the right manner.
I think I said the same thing.
Okay,
Sorry.
okay. So we'll come to Krishna on this, yeah.
See, I come from an old school of thought.
Yes.
So I would not say I am not for AI, but it has to be measured use of AI. Because if we try to use AI at every instance, it might not be helpful. I give you an example. Suppose you have a 3 o'clock, 4 o'clock evening craving and you go for a 2-minute noodle, it is good option maybe. But it cannot replace your meal. The moment you replace 2-minute noodle with your meal, you know what is going to happen to your stomach. I give you another live example about AI in fund management. Some time back I asked my CIO that I have a tool, and in fact someone mentioned some time back today also. That tool, what it will do is every quarter the research team has to maintain the balance sheet data, in Excel, and every quarter you have to update that data. It's a time consuming job. So I went to him and I said, boss, why are you asking so highly paid people to do this donkey's job? This is some, AI can do it easily. And the cost is not very high. After listening to me, he said, leave about the cost. If I get paid to use this, then also I'm not going to use it. And I was surprised. Why? Because this is going to relieve you from, monotonous job. He said the job that you consider monotonous, it is the real job of fund management. Because until the guy picks the data and keep it in that Excel, it does not go in the head. So muscle memory is not building. So AI can do it easily. It can relieve me from that job. But this is the perspective I got that day, that is the main job you are trying to eliminate through AI. So we need to be careful what we are doing with AI.
Yeah, Jay, I think you have raised a controversial or very interesting question, whether AI is for everyone or AI is only for select few.
So I actually, I'm seeing people getting restless, so I had to ask this question.
Yeah, but very interesting question. One thing is very clear, you can't take AI or restrict it to certain set of users. And I agree with most of the views. I was just reading the chat GPT usage in India. It is weekly 100 million users, which is actually 20-25% of WhatsApp usage. So of course, India and Indians have accepted and adopted AI in a big scale. Now the question is, what kind of guardrails are we putting in? Are we having some reckless or a very liberal usage without any guardrails? And another thing, I agree with Shruti. I think where the cost of advice is very high, and generally advice are restricted to only HNI clients. If you use AI to democratize advising, I think it can play a wonderful role. Of course, we have to ensure that there are proper guidelines in place. So I think it is not about whether AI will take over human or human will continue and ignore AI. We have to ensure that both are best used to ensure that the right product is offered to the right individual.
No, great. So we'll come to Mr. Saurabh. What's your view?
While primarily I agree that AI cannot be and should not be restricted, it should be available to all. While everybody's been advocating AI, a counterpoint I want to put is, what is the cost of that AI? Currently, we are not paying the full cost. Companies are subsidizing the AI cost. We need to understand how much it would actually cost if we pay the full price of AI, whether it is from the electricity point of view or the compute point of view.
Making noises, there is a panel discussion going on. Please, I'm so sorry, sir.
That's another perspective that I actually want to bring out. The cost of that AI. Sometimes it might actually be more than the cost of the human.
So, Naveen ji would like to add something on this. I believe he has logged.
Very sorry, very sorry.
Okay.
Sorry, do we have time? 2 minutes?
Yes, sir.
Yes,
Please go ahead,
please.
sir.
Okay, I think the right balance, as everybody said, is not a fixed point, Jay. I think this AI evolution shift as the market becomes more mature. The investors get sophisticated, means there is difference between a layman as an investor, a moderate, or a sophisticated investor. So now I would say the investors are not laymen to a large extent, tier 3, tier 4, or maybe tier 2 cities also seen where the Nasdaq closed or where the NICE is. So I would say the investor and sophistication and the nature. I would agree with Saurabh to an extent that the nature of innovation actually. So we can't say with confidence today that it is good or bad. But none of that happens automatically, and I would say all of it is really possible. So that's my last point on it. Thank you.
No, thank you. And just on this point also, I'll also like to add my 2 cents here. See, AI is an artificial intelligence which has been created by us, we humans. So I always try to give this comparison with, a mythological story of Bhasmasur. So Bhasmasur was created by Lord Shiva, and if it is not controlled, we know what was the outcome. Lord Vishnu had to intervene to control Bhasmasur. So same thing applies on AI. Since we have created it, we need to have the guardrails in place unless it becomes a Bhasmasur for all of us. With that, I would like to end this panel discussion. It was a lovely interacting with everyone. You want to ask? Can we take the question? Yeah? Yes.
In the FD, the rate of interest is fixed, plus 2%. But in the loan against the mutual fund, what will be the valuation? That is my first question. Second question is you are the good experts and especially the online. Will fund manager be replaced by AI in future? And third is the fake apps. Even today or just few days ago, someone fake investment claim by misusing the finance minister. Just 2-3 days ago. You deposit 22,000 rupees, you will get 20 lakh in return on deposit of 22,000 rupees. So fake apps need to be controlled. You rightly mentioned on that, cyber. Thank you.
So I think the first question, Krishna, if you want to take in.
I don't know what valuation you are referring to. If you are talking about interest,
The loan to value.
The loan to value, okay. So normally if it is equity mutual fund, you get up to 50% of your value as loan. And if it is debt mutual fund, you get around 80-85% of the value. Yeah, so FD normally you get around 90-95%.
Yeah.
Okay, thank you, sir.
So-
Yes, sir, please.
Yes.
This AI will be regulated by SEBI also or not?
So, yeah, and Sandeep wants.
AI, SEBI is not a regulator of AI. Uses of AI can be supervisioned by the SEBI. So what, for an investor, there's investor protection is the first primary principle of SEBI. So under protection, what kind of uses are allowed, permissible by the AI will be governed by them. So today, what as a distributor, as a manufacturer, whatever product we make, we goes to SEBI, we give the demo, take approval, then it goes to consumer.
You know, recently Supreme Court has given AI being misused for judgments. So same thing can be done in also this mutual fund also.
Sir, this is a very big topic. I think we are running short of time, and so we'd like to conclude this panel discussion. But since one last point,
Sure, sir.
yeah.
So we can do it
Yes,
off the camera.
we can do it
also, please.
offline.
Yeah.
We can do it offline. Yeah.
Thank you.
Yeah.
Sir,
Thanks,
sir,
sir.
we can
do
discuss
offline.
it during the lunchtime.
Just
also.
to
Please, sir.
conclude,
Please,
we
sir.
were talking about AI, but on this topic of AI, I just realized a very basic human behavior. Can somebody guess that? So the very basic human behavior is that the food for thought cannot overtake the food for tummy. Thank you.
That was a very wonderful conclusion to this panel discussion, sir, really. Very spontaneous. Thank you to our session moderator for ending this on a very beautiful and a very fun note. And all our esteemed panelists for sharing their valuable perspectives. I request you all to kindly rise for a group photograph. Thank you for joining us today, and apology for the problems they're facing at the back. We could not have a discussion further. Ladies and gentlemen, with this we officially conclude today's program. ASSOCHAM would like to thank each one of you for your presence. We would like to thank our partner, Presidium partner, Minda, Axis Bank, Sorin, co-partners, IndusInd Securities, Paytm Money, Dhan, associate partner, Vistra, BSE, NSDL, SMC, asset services partner, MCQ, and knowledge partner, CareEdge Ratings. With this, we officially conclude today's summit. Thank you very much.